This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The U.S. military said it will begin a blockade of all maritime traffic entering and exiting Iranian ports and coastal areas on Monday, after weekend talks failed to reach a deal to end the war with Iran, jeopardizing a fragile two-week ceasefire. The talks in Islamabad, which ran from Saturday into early Sunday, were the first direct U.S.-Iranian meeting in more than a decade and the highest-level discussions since Iran's 1979 Islamic Revolution. The negotiations came days after a ceasefire began on Tuesday, aimed at ending 6 weeks of fighting. The U.S. Central Command said that the U.S. blockade, starting at 10 a.m. Eastern Time on Monday, 1400 GMT, would be enforced impartially against vessels of all nations entering or departing Iranian ports and coastal areas, including all Iranian ports on the Arabian Gulf and Gulf of Oman.
Oil prices climbed above $100 a barrel on Monday as the U.S. Navy prepared to block ships to and from Iran via the Strait of Hormuz, a move that could restrict Iranian oil exports, after Washington and Tehran failed to reach a deal to end the war. Brent crude futures rose $6.96, or 7.3%, to $102.16 a barrel by 0430 GMT after settling 0.75% lower on Friday. U.S. West Texas Intermediate was up $8.12, or 8.4%, at $104.69 a barrel following a 1.33% loss in the previous session. The market is now largely back to conditions before the ceasefire, except now the U.S. will block the remaining up to 2 million barrels per day Iranian-linked flows through the Strait of Hormuz as well, said Saul Kavonik, head of energy research at MST Marquee.
Moving on to the top news in the energy sector.
Asia's biggest liquefied petroleum gas, LPG, importers, including India and China, are racing to replace disrupted Middle East supplies with cargoes from the Americas, driving spot premiums to record highs, analysts and traders said. LPG exports from the Middle East, Asia's top supplier of the fuel used for cooking and feedstock for petrochemical plants, have plunged since the US-Israeli war with Iran started in late February. The supply shock is squeezing Asian petrochemical producers' margins, forcing them to cut output and raising costs for millions of Asian households, analysts and traders said. India and China are the biggest importers of LPG from the Middle East.
Germany's coalition government has agreed fuel price relief for consumers and businesses worth €1.6 billion, $1.9 billion, ending a spat about how to react to a spike in oil prices due to the Iran war. The energy tax on diesel and petrol will be reduced by about €0.17 per litre for 2 months, the conservative CDU party and its center-left SPD coalition partners said on Monday. The Iran war has caused the biggest ever disruption to global energy supplies, and a planned U.S. blockade of Iranian ports and coastal areas is further inflating crude oil prices. Next, we have the top news in metal markets. Aluminium prices jumped to their strongest in 4 years on Monday after Washington said it would impose a maritime blockade of Iran, reviving fears about weaker supply from top producers in the Gulf. Benchmark 3-month aluminium on the London Metal Exchange gained 1.7% to $3,558 a metric ton by 0930 GMT after touching $3,578, its highest since March 31, 2022. The U.S. military said it will begin a blockade of all maritime traffic entering and exiting Iranian ports and coastal areas on Monday at 1000 ET, 1400 GMT, after weekend peace talks failed.
Iron ore futures rebounded on Monday, snapping a 6-session slide to a 1-month low, as surging oil and higher feedstock demand supported the market. The most traded September iron ore contract on China's Dalian Commodity Exchange rose 1.26% to 763 yuan and 50 fen, $111.75, a metric ton. The benchmark May iron ore on the Singapore Exchange was 1.08% higher at $104.60 a ton, as of 0710 GMT.
We will now look at the top news in the agricultural sector.
Chicago wheat futures rose on Monday, supported by higher oil prices after US-Iran talks collapsed and a potential US blockade of the Strait of Hormuz heightened concerns over global fuel and fertilizer supplies. Corn and soybean futures also climbed. The most active corn contract on the Chicago Board of Trade, CBOT, had gained 1.5% to $5.79 minus 1/2 a bushel by 0232 GMT, while CBOT corn added 0.7% to $4.44 a bushel and soybeans SV1 rose 0.1% to $11.76 minus 3/4 a bushel.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.